Bhaskar Bhat is with us. Bhaskar, good morning. Strong numbers in the jewelry segment. What went right for you? Because
good morning.
There were so many fears about what demonetization could do, but these numbers clearly say that maybe those fears were unfounded. Your first thoughts.
Well, I don't know why people had any doubt about where we would go. Demonetization, of course, was an unparalleled, unexpected event. But before it would have been much better if not for the demonetization. That's all I can say. It's thanks to exceptional work that we've been doing in terms of new product introduction, new collections, generally marketing, smart pricing, smart activation across the board. So that has worked apart from our network size increase. So the point was, we also had, I must say, a very good festive and wedding season combined in Q3. But demonetization dampened it for a few weeks thereafter. The rate of growth was much higher before that. It's kind of coming back to normalcy, and the reason is that we've got migration perhaps from the rest of the industry to our business model. A large number of customers feeling safer and to buy at Tanishq rather than anywhere else. Plus the other jewelers have got affected because their entire, for large numbers of them, their entire supply chain was cash from the customer facing end to the back end. Whereas in our case, at least, customer facing end was relatively lower in terms of cash, but the back end was entirely non-cash. It was checked with our vendors. Therefore, our supply chain continued, so our products were available for consumers to buy.
Okay. Well, morning, Mr. Bhat. Now, as the demonetization impact wanes and others are on their feet, should we see, therefore, a different Q4 altogether? Will it be higher or lower than Q3?
The growth rate you're saying?
Yes.
No, I am, leave the demonetization effect out. I mean, we would have got migration, which is a kind of a bonus, and that is going to continue for a long time because the shape of the industry is going to change. I'm talking about the retail part of it. Consumers is another story, because consumers will continue to buy because of design and pricing and brand and so on. However, that benefit apart, I was telling you that it's because of the introduction of collections like Shubham, and before that Queen of Hearts and Niloofar, etc., continuous barrage of product introductions, that we've been able to get this growth rate. Demonetization, we've always talked about an unorganized sector getting organized, the informal sector versus the formal sector. That is the new language. And I think the hard work over the last 20 years is beginning to pay now. That's the bonus. That's all I can say. So we will continue. We will continue to grow. We were growing at a much higher clip before demonetization. That has come down, but we'll continue to grow.
Okay.
Fourth quarter, yes, it's started off well. We should continue to.
Okay,
Yes.
that's about your jewelry segment that you told us how you've seen market share move from unorganized to an organized player like yourself. But what about watches? Over there, although the growth is good, not as bad as feared, but it's still not in double digits. You've seen about a 5% growth in watches. At what point over the next 1 year could we see the growth in watches return to double digits?
Explain the difference.
Sure.
Yeah, sure. Well, there are in the watch business, the distribution is slightly different. Jewelry is entirely retail controlled, almost controlled entirely by the company. 230 odd stores across our brands. The watch business, however, has retail intensity only for about 50%. The balance is the watch trade, and there, much like the unorganized jewelry trade, jewelry industry, the transactions are all in cash. These are small retailers in far-flung areas as well as within the cities, and the sales there got affected, and that has taken a while to come back. Again, if it had not been for the demonetization, the growth rates were double digit in that quarter, but it's got affected because of that. So you will see again, even in the watch business, thanks to demonetization or the monetization, remonetization, plus GST, which is around the corner in a few months from now, that will again benefit an organized player like us. Independent of that, several new initiatives, especially in the smart space by the watch business, Octane, Raga, and some work that has happened in Fast Track, the growth rates are slowly creeping back.
Okay. But, Bhaskar, this 15% sales growth and 15% EBIT growth, this counter view that post demonetization you saw a lot of rush towards buying jewelry. Do you think this kind of sales growth and EBIT growth rate can continue? You're saying that you won't see slowdown, but can the pace continue at 15%?
I am confident that the growth rate of top line will continue. The EBIT growth will depend on the product mix, which is essentially in jewelry, the studded, and we have seen studded sales grow quite rapidly in the first 2 quarters. It's only in the December month that, because of timing of the schemes in the 2 years, that the studded percentage, I'm talking about diamond jewelry, it was less at 21% this time. So we are confident of a good growth of top line, and once top line grows in jewelry, the bottom line for the company also grows well. Percentage of bottom line, 15% was our target for jewelry growth, and that we are confident of achieving.
Mr. Bhat, I take your point that as the sector formalizes with GST, an organized player like you will definitely be able to grab a larger share. But, you know, what was the World Gold Council telling us? That the demand for gold jewelry in India dropped to a record low. I think they called it some 7-year low or something like that. A record low of 662 tons. I'm just reading out from a news report. Is gold as the investment choice in India beginning to recede at all? Will that impact your secular growth story?
Yeah, well, you know, we have always looked at gold as an adornment rather than investment. Of course, you cannot deny the customer that it is also an investment. It's also store of value. Now, WGC's figures are based on imports, okay, and there is some estimate of consumption, but it is not. Our figures are actual retail sales growth that we report, okay. So to us, the growth continues. Consumers want to buy jewelry, increasingly diamond jewelry, which is for adornment. The investment bit, which is a large part of coin sales and plain gold jewelry sales, that I believe is going to has been impaired and impacted because of regulation and government action, which is the right thing to do, because, you know, gold being stored away in a vault is not in the interest of the country.
Okay, Mr. Bhat, before we let you go, just one final question. Are you completely phasing out and shutting down all the Gold Plus stores? And what would be the costs involved in, shutting it down or any kind of restructuring?
Well, not significant, because most of them are going to get converted to Tanishq. So it's only the revamping of the store and the revamping of the stock. So there is some impact, but it's not significant.
All right. Okay, Mr. Bhat,
Because
pleasure.
If
Sorry, please go
the
ahead.
store and we were to compensate the
No, go ahead, please.
If franchisees were to be compensated, then it would have been a problem. That is not the case. Most of the stores are getting converted. Thank you.
All right. Thank you very much, Mr. Bhat, for joining us with all those angles.